Yo traders, what's good? If you're new, welcome to the channel. If you've already subbed up, you know that I salute every single one of you. Before we jump onto the charts and start analyzing, I just want to let you all know that the Discord link is in the description and it's totally free. So yeah, feel free to join and get involved with the community. Just jump straight onto these charts and take a look what's going on. So I'm on my favorite pair, NASDAQ futures, and it's Tuesday the 4th of February. So it's like 2:05. So we got this like bullish 5-minute channel. I'm seeing a lot of nice structure, to be honest. I'm not going to lie. Some support and resistance areas. Pretty clear ones as well. You can see, you know, prices bounced up from there. Come back, started rejecting it. Now it's above it. We're hoping for a push up, really. But it doesn't matter. We just draw them there just so we know where we're at. Does that mean I'm only looking for buys? No, it doesn't. I just like to know that that's where we're at. So I won't be surprised if it did start going up, but I won't be surprised if it breaks through. It doesn't matter. Just got to draw these areas so I know. The next thing I draw up is my breakout lines. So if you didn't know as well, sometimes, you know, moving averages can act as support and resistance. Price likes to reject from them, etc. But I think they're just good for an extra confluence. I wouldn't actually, you know, use them to enter from. I'd still want to see breakouts. And then I look for my targets. So basically, if I break to the upside, I'm probably going to want to target previous structure, or just get out on my 1 to 2s, 1 to 3s. On a 5-minute time frame, I go for a 30 to 40 pip stop loss to feel a bit safer. Gonna take a picture of that for the Discord. Let me take a picture of the short example. So this is why the 5-minute time frame is safer than the 1 minute, because if we was on the 1 minute now, then yeah, we could have caught this break, but look at this big wick coming back down. There's loads of fake outs. 5-minute time frame, it is definitely longer, but definitely safer than the 1 minute time frame. So if you look sometimes, look at these 15-minute candles. This shit happens all the time where they just boom down and then they boom up. I don't even need to look, but I'm pretty sure these are in the New York session. So yeah, for it to just break through now and get to the top, it really wouldn't be that hard. So that's why it makes sense to draw your breakout lines on the 5-minute time frame instead of the 1, unless you really want to be in and out of the markets on the 1 minute time frame and use like really high lot sizes or a lot of contracts with futures, and then you can get in and out really quick with a profit. But yeah, realistically, we're looking for these 5-minute structure points to be broken. So you see, all of this is structure. All of these little pullbacks is structure. So you're looking for the most recent clear ones to place your breakout lines. And then when that 9:30 Eastern time kicks in, wait for the break. And enter while it's breaking as well. Don't wait for the candle close. Bit more power than that. And I'm in. So that's bullish momentum. I'm in. I believe that give me a 30 pip stop loss or so. Yeah, 34. It's a pretty aggressive stop, but you know, if I get stopped out, depending on how the wicks are and stuff, I'll probably just re-enter and take that as a fake out. But maybe I'll just wait to see my next setup as well. Set itself up nice and clear, because it is news in under 20 minutes now. And everybody know now to move the break even. If
order fill.
Break even, just waiting now for another setup, basically. I do think it's still probably going to go up though, so I'm just going to draw another breakout line. But if we break above that with some volume and we're going to get back in, I'm still going to target, so like there, an absolutely maximum profit would be that wick at the top. But let's just see how price treats us. Still got news coming up, so I keep all of that in mind. But this is just my second entry I'm looking for now, just by sticking to these simple little breakout lines. That's all I'm looking for, breaks of those with some volume. 33 pip stop loss. That'd be a 1 to 2. But I will be adding contracts if I get into profit. So yeah, it'll be more than a 1 to 2 by the time I'm done adding contracts to it. Micro contracts, that is. So pushing okay, pretty decent. Need a bit more power though. Cool.
Order filled.
250, razor sharp. Okay, let me get rid of this green box. It's just confusing. I know where I'm at. And I don't think I'll go for that wick. I'm just going to go for there. Now that's a big rejection wick. I would not be surprised if I just get stopped out now with this big wick being left. I always explain to people as well in my Discord and anyone who watches me, if it leaves a wick like that, I'm pretty much flipping my position. And yeah. Wow. I ain't lying when I say this shit happens to me all the time. Like, probably too much for my own comfort now. I get close to being wicked. Like, maybe that's a sign I need to, like, move my stop loss a few more pips. Because I'm always a wick away. If I was trading this Forex now, I'd be fucked. I think I still am fucked anyway. But that was crazy, though. I was for sure waiting to be stopped out then. Literally, look at my video I uploaded yesterday. I was like a pip away. And I said on there, I don't even think half a pip exists. It doesn't. But if it did, I was half a pip away from being stopped out. But that's why I love futures. There's just no spreads. Do you know when you understand how volatile NAS is and US30 and how scatty it can be, even how sketchy it moves sometimes? That's when you'll become more comfortable trading it, getting involved, not worrying about the volatility. These stop losses though being like breathed on like that is worrying, of course. I ain't gonna lie if I say that doesn't like bug me out a little bit, but when you know how these pairs move, then that's why you just get comfortable in them like me. Do you know what I mean? So I'm just trailing my stop loss pretty aggressively, but keeping it to like 250 because that's what I'm comfortable with losing. So now I'm at 250. I can go to break even again. Pretty much, yeah. Move it to break even. So we're pushing now. That would be 5. I need a bit more than that. Try and make
Order
it
filled.
A little bit more.
Order filled.
So I'm close to my TP. This is really aggressive scalping. Probably the most aggressive scalping you're ever going to see. But I'm risk-free in my head, so that's why I don't really care. You got to look at price like a magnet, right? You got to look at like where price has been before. It's kind of like a magnet. You know price is trying to get there again. Even if it just like comes up and wicks it and then comes back down and takes liquidity, you just know that it's going to get there at some point probably. So that's why when I see these 1 minute candles shooting up like that with volume, I'm just getting in and I'm aggressively trading my stop. Look, it's just, like I said, like a magnet. I'm used to seeing it. Yeah, see, I have my take profit right on this structure there. That's all I'm waiting for it to be tapped into. And I think it's going to get there about now. Look, it's about to tap in. See, this is where the emotions kick in now. People start closing and, I don't know, freaking out and stuff. It's this close. It's so close. It just needs to tap into this structure. Maybe on the candle bodies, I'll put the TP on the candle bodies. Yeah. But when you start to look at it and know it's not a coincidence why it's moving this way and why it's reaching these levels, because these levels are literally where liquidity's resting and where people's stop losses are. So if you think about all the people who pushed price down from this area, this big sharp move down,
Order filled.
you got to understand, like, that's why it's got there now, look, and it's still pushing. They'll probably even get to this second purple line up there because that's where people's been putting their stop losses. Look, anyone who pushed this down and was selling, all their stop losses was resting up above this area. So when price comes up and wicks it and then comes back down, it just took liquidity. That's literally what it's doing. So that was a nice dub. It was very aggressive, but like I said, when you get used to it and you're risk-free, you're going to, you know what I mean? I'm aggressive with it. It doesn't affect me psychologically, right? If that's how you say it. Psychologically, yeah, it doesn't affect me. But that was a fat dub, and I think anyone in the Discord caught that dub, to be honest. So if they used a 40 pip stop, yeah, they would have been absolutely fine. If you enjoy this kind of content, then please sub up and help the channel grow, and feel free to join the Discord. The link is in the description. I do this like every day.